Hello, everybody, and welcome to the Plus3 Futures and Commodities show. We are recording just before the close on Friday, September 22nd. My name is Ben Maldonado, and as always, I'm here with my partner, Barrie Hederachi. Barrie, how we doing today?
Doing well. Doing really good.
Are you tired? It was a busy week.
Well, it was a busy week, but it was a good week. Everything kind of moved the way we thought. So
Yeah.
I chalked this up to be like an easy week.
Right.
And we've had rough ones when things are just perfectly sideways and nothing's moving.
Oh, that's so frustrating. Yeah, I mean, it's nice when you put in the work and then the market starts moving and hitting levels and you can get involved and trade and make money. It's kind of a nice week. And we did have that this week. On the show
Except
today,
for Bitcoin, other than Bitcoin.
other than Bitcoin, look at that. It just continues. I was just chatting with you before we got on the started the recording here, and I said I drew that channel in there to kind of define what's happening, and man, is that tight and boring.
Yeah, well, you know what comes at the end of those. So
absolutely,
we got.
I mean, we had one here, something similar.
Right.
Could draw a channel in there. You had this sideways here. So it's,
I think that ABCD thing we looked at a couple of weeks ago is still in play.
Right, where we ended right here. Yeah.
Yeah.
Oh,
so, this pullbck is the key. If it's going to be a one-day pullback or a couple of days, and what happens after that.
And again, if you've watched our videos before, you understand the methodology. If not, we'll quickly cover it. Essentially the key points on this chart are the half square here, and that's about 24,400. And then the full square up here, which is about 28,900. In between there, and you're essentially trapped, as you can see here. This price action here, we were stuck in between. Once you get above, the idea is to sit on top of it, and then you can build for the next level. So right now, since we've been stuck under this full square here, which was pretty important spot, price basically danced on top of that for about 6-8 weeks. It's better to the downside, but until we take out the half square, we're just stuck. So it's a better watch for now, waiting for either one of those levels to be violated. I don't know if you got anything else to add on that, but it's kind of Dullsville there, but we know Dullsville leads to things like this. Look at this.
Yeah.
2.5 months sideways, and then we get a huge move.
Right.
So just be ready. Know the levels and be ready. On today's show, we're going to cover, we're going to spend a lot of time with Barrie on the big five, because there was a lot of action there where he's going to cover ES, bonds, crude oil, gold, copper, the dollar, and the euro. And then he's going to throw it back to me. And I only have, believe it or not, I only have one sole commodity to look at, and it's a short at that. So we're going to cover cocoa. I'll talk about the other ones and why, I'm not highlighting them yet, because they're all sort of winding up for some kind of move to come soon. But we'll talk about those. Let's jump in, Barrie, to your stuff, because I know you got a lot to cover and there's a lot to talk about.
All right, let's do that.
It's a very interesting juncture in a lot of these markets. Oh, you got that ABC drawn in. I have that ABC drawn in too.
This one here? Yeah.
Yeah.
Last couple of weeks ago, I think.
Yeah.
Couple of things to clean up. I guess house cleaning. This trend line is a goner.
Yep.
And we took the lower trend line out.
Yep.
So there you go. And what we have left with is really this zone here, 43.25, 42.97, this sort of the 25-point range right there. And interestingly, of course, the ABCD ends up right there.
Right.
What else do we have to go with that? Not much. Well, if we go from the high now, now we had the low till the high came in. So if we go off the high, you can see the ABCD just magically happens to be exactly at the 50% of the square of 90.
Takes us right down to that half square, doesn't it?
And if we can get there by the end of the month, 28th, well, it could square out perfectly 45 by 45. And that would, if it does square out there at support, will set us up for some kind of another counter trend or some kind of consolidation before moving on. So that's the big deal here. I mean, the ABCD and the 45 degrees down from the high lines up. So that's to be noted. You know how these things, when they come together.
Yeah.
And for those of you who are not familiar with all the Gann analysis and Gann squares, the squares are static. So this ABCD, it's coming in on its own geometry. There's no way to force that ABC to be exactly at the 50%.
No.
So, and if it exactly gets in there, plus or minus 1 day off the 28, well, that would balance price at time. And we would expect some kind of a reaction to come off of that. And if we don't get a reaction, well, then it's really bearish, and we would expect maybe a bigger move, maybe 72 or even a 90.
Mm-hmm.
Right? It's kind of how it goes. Well, we left off talking about, last week was really about this 44.75. Remember that?
Yep.
We talked about that. And I remember talking about 45.23. If you guys go back and check. And the point with the 45.23 was to say, if rallies really can't get above that, then the market is weak, and we can expect coming in this week weaker and to go lower. And I was just laying the square down. We had 450 coming into today, high to this low.
Mm-hmm.
But I don't think that matters so much at this point. So we left off with the 44.75 and with 45.23 as the upper limit for any kind of a pullbacks that fail below that to indicate weakness. We didn't get any of that. It was all weak price action, and here we are. And we talked about how if 44.75 was taken out, we'd have a 100-point drop. And there you go.
There you go.
On a silver platter. So, I mean, it could do better than that, right? I mean, you got to call it when we have it.
Interesting timing too, given that we've got the autumnal equinox this weekend.
Yes, exactly. So a lot of things in the mix. We'll see how it plays out. It's nice if we can square out with the equinoxes and all the different seasonal timing that we have.
Mm-hmm.
And we still might. It could be sometimes you can have the seasonal come in, but it would time off the moon or something. And so we have to really watch the other cycles that come right around that time.
Sure, it doesn't have to be the exact day.
Exactly.
Around, if you get something nice in terms of a square around there, it's really important to take notice of that.
So that's the thing. So we'll continue to watch this down leg. As of now, I don't really have, I don't think we stopped at some kind of a square or some kind of a timeout point. Mm-hmm. So the trend is still down. Yeah, it's finding some support at 43.70. This area is really pushing through. I mean, now it's 43.63, as you guys can see. Going into the close, we have 5 minutes left, I think. 3 minutes left. But ideally, it would be nice to get down to 43.25, this area, because that would give us a really solid footprint. And from there, we can start to do business. It would, this contract would come down, and this is all new. So if we went to, well, here, let me take a look at, let's jump to the 30-minute just really quickly. What I wanted to show you guys was that this low that we had on the 18th, right there, if you look at without the rollover, then you can see we already broke through that. You see that low right there on the 18th?
Mm-hmm.
And look where the bounce today came in, that 43.98 right there.
Mm-hmm.
So this high came and tapped exactly the low on the 18th. And the low on the 18th and this low on the 25th of 2 we were tracking. And you can see how, how these things come into play. We sort of ground our way up here and exactly to that low, and we turned lower. And even after that, just pointing to the power of these Gann squares, you can see how we broke through earlier, rallied right back up into the 180 line from the high, stalled out, and look at that flush, right?
Yep, right into the
People
close.
trying to buy that rally into the close, thinking it's some kind of a relief rally. Well, you're not going to get any relief as long as we're under 43.86. This zone here at 180. And it's really starting to pull towards 43.5 to 43. This 50% square is really 43.40 right in there. And if that goes, 4,300, 4,320, this area is the next area of support. So far as the 30-minute goes, everything was very clear. Everything stopped exactly where they were supposed to. And I don't know if you guys follow us on Twitter, but we kind of managed our way down perfectly just using the 30-minute. I don't think we even looked at the daily this week. Right? On Twitter. Maybe you did, but I didn't. Yeah. So anyway, getting back to the daily, we don't really have I don't have any support here below 43.70, and looks like we're really struggling there. Come Sunday, Monday, let's see what happens. So for next week, 43.25 to 42.97, this bracket is really where we're looking for some kind of a support. Anything you want to add to that?
No, just that for me, in looking at it from a daily basis, watching that ABCD and under 44.44 is bearish for me on a daily basis.
Under 44.
44.44. That's
yeah,
the
for
key.
sure. Yeah. Mm-hmm.
That's the key for me.
Yeah.
If the bulls want to flip this, they got to get above that level.
Right.
What are you using for your resistance for this week?
On the weekly or here? You mean
No,
just
right
on the
there.
daily? What we're looking at here?
Yeah.
Well, I don't really have one. I mean, we'll develop some on the 30-minute because we're looking at a lot of short term. So basis that 43.86 is really the key here because that's 180 down. And you can see how we got really messy in here. Look, see that expanding triangle action that's going on here. So it tells me, we just finished the third and this is probably the fourth.
Yep.
So you can see that that's definitely what we call both wave kind of action.
Yep.
And especially if we go, like a 1, 2, 3, right? 4, and that would leave a 5 to drop down. And because of this, I would say kind of like how we used 45.23 last week. We said, well, anything below that is just basically weak. And any rally that fails below that, well, look at all the rallies that failed below that.
Sure.
Right under it. And you can see they go lower and lower and lower and lower. So for next week, I would say 43.86 is really the level. If you want a level to watch, I would say 43.86 is the level because of the logic here. We're down 180. In this corner here, we're 180 by 270. So yeah, if we can get above 43.86, maybe we'll get some kind of a rally getting up a little higher. So we'll see how that goes out. This is supposed to be 44.31. So don't mind that.
Right.
So we have that 43.80 number, and that's a good supporting number to the 43.70 we have here, which is really on the daily level. And, we can definitely play around plus or minus 10 points around that at this kind of volatility. So it's okay. But I would say the way it's closing and looking at the price action, this 43.25 to 97, this area seems like the logical conclusion for this leg, however we end it. I mean, we could have a little bit of a rally and then come back down. We could have a couple of day counter trend before we go straight down. But either way, this looks like a better place. So that's what I have for the daily, keeping it simple. When things are moving your way, you want to just allow it to just really move your way, and you just want to stay behind it. So I think that's what we can do.
I know that's exactly what you're going to say when you get to bonds too.
Yeah.
Perfect example.
Let's take a quick look at the weekly before we get going. So weekly, if you guys checked last week, and speaking of last week, if you guys like our work, please remember to, hit the like button. How about that? And subscribe and share and do all the things. Maybe ring the bell for alerts when we post these things. And we might start posting it more frequently after this, so you'll get the notices right away. Anyway, we left off last week looking at, and we record on Friday. I remember you and I, Ben, we were talking about this bar. We said, hey, watch for the low of this week to take out. If it gets taken out at this point in time, we're going to go.
Yep. And we sure did.
And we did. And we joked about how it happens around every corner. And we talked about why certain corners matter more than other corners.
Mm-hmm.
Yeah. And that's exactly sort of what happened. And now we have enough space to do one of our favorites, maybe drop a ABCD on the weekly and see how what happens.
Yeah, see where we end up.
That comes out right about 42.85.
Mm-hmm.
Well, that's quite a ways from where we
Yeah,
are.
yeah.
Roughly another 100 points. So,
That's right.
you know, and that would be you know, it'll be okay. It's within reason. So
Mm-hmm.
we'll leave it there. So you guys, for next week, and we talked about this last week about how this 5/8 line could be providing good support, mainly because we held the counter trend rally here before the final low came in. So that level seems to be important. And when we ran above that, we came back and we held right above that before rallying. And so coming into that is really going to be important. That's around 43.30, 25, 28, right in there. So keep an eye out for that. That could be potentially support in that zone. Other than that, if you guys go back to, I don't know, 1, 2, 3, 4 weeks, even a month out, you can see how we were developing this high. We were waiting for the lower high to come in. So now that all of that came in and now things are rolling, so what we want to really do is to really stay with the trend till we see some kind of a cycle or multiple cycles firing off at a low to say, okay, now, you know, we might be able to expect a turn back up. This leg might be finished. So far, I'm not seeing any of that. So there's probably more downside to go, as far as I'm concerned.
Sure.
Yeah. And you're going to be looking at the NASDAQ, so I'm sure we can see some of that there.
Yep.
So that's it. That's it for the ES. And you guys saw how 45 degrees from this high was right into that. So those are the key things to remember for next week. And we talked
And the key thing too,
Mhm.
Barry, is that, you know, you and I have been talking about ABCDs coming down. It's also possible this is a 3.
Oh, for sure. Yeah.
And if it is, it's going to be a hell of a lot bigger move than an ABCD.
Yeah, it's going to last more than a few days, and maybe a few months, you know. So,
right. So we have to see how it plays out.
Exactly. And we don't have any key support or timing cycles expiring in here this week. So which means it's open, you know, the book is still open. So let's stay with the trend. Moving on to bonds. Talk about everything hitting numbers by Friday.
Oh, beautiful, man. Look at that.
I mean, we had it tapping 43.70.
Right.
Go back to bonds. Here's the ABCD we put in, and there
it is.
And not only did it tap it yesterday, of course, we get a little bit of a bounce today, right?
A rally today.
So that's really cute.
Mm-hmm.
Well, going into next week, the big idea when we go to the weekly, you'll see why I'm saying this. We've been we've been on the short side, and the thing with the ABCDs are, you know, when the leg gets a little bit old with some time on it, and it's coming into some timing points or support areas, we really like to watch to see if it's terminating with some kind of a pattern. And we drew this in, I think, last week or the week before. But that's not the end. You know, we can do an ABCD based on this one. That might have hit also, actually, come to think of it.
Right.
Let's see if it has.
Does that take you right down to the full square?
No, it takes us right down to today's low.
Yeah, it does.
Let me make it a little bit thicker. There you go. So, and that would bring us right about 72, I think. So we're probably switching. So there we go. So what does this tell us? Well, while we're still bearish on the bigger picture, we do have support here, and we did come in hard with double ABCDs. So we have to respect that and think, well, you know, sure, let's see what the next counter trend looks like.
Also on a 4 hour, I had a 45 by 90 at the low.
Right. Okay. That's so that all lines up.
Yep.
And here the thing is we kept laughing and joking about this low and how that has to get taken out. And well, here we go. And I said, one
Mhm.
day we'll be sitting here talking about that, going, look, it did take it out.
Yeah.
And it did take it out. And the important thing is today, we didn't have a hell of a rally like it was a false break, but we had enough of a reversal and it got above the 72 to take note,
Yep.
And
That's possible. This down leg is over, but not the down move.
exactly.
Mm-hmm.
And so it's possible that we get some kind of a counter trend next week because we haven't really had one all through here. So like a little ABCD like this, anything is possible. So let's let it come through because of the 72 setup and because of the possible false break kind of setup here, even though we should have run a little harder, but it still ran. So we have to note that. So watch your shorts, and if you were watching the ABCDs, at least you knew exactly where to cover some of that. So ABCDs are always a good target.
Mm-hmm.
And for now, we're if it's really moving higher, we want to see counter trends on lower time frames, counter trends coming down to hold above 16.5 or so. If that's the case, we can expect a decent counter move up from here.
Sure.
That clear? Did
Yeah.
I make that
Yep.
clear? Yeah. Okay. That's it for bonds. Let's look at the weekly bonds, which is really the deal here.
Mm-hmm.
And the reason I'm kind of hedging on the the low is in is because of this.
Still that 144 is there.
Yeah, the 144 is there, and no matter how you look at it, it just seems like it has to somehow get fulfilled.
Mm-hmm.
So we'll wait for that. And as far as the weekly goes, from that perspective, long as we're below, like let's say 123, this whole thing is still bearish. There's really no upside momentum to speak of. And you can see we really haven't seen any. And if you notice, we also tapped and pushed a little lower on this expanding triangle, the lower boundary line. And usually when we tip over a little bit to the other side, that signals sort of a climax temporarily, maybe.
Mm-hmm.
And so that could be what we're seeing. And we've got plenty of room to consolidate or rally before we head back lower. So we'll leave it at that. Moving on to crude. Not much because crude has
a quiet week.
Quiet week, resting week.
Mm-hmm.
So really in short, crude 91 was our target from, I don't know, all through here. And we were waiting for it to get there. We got there. So last week we talked about how it kind of squared out. So we're just waiting to see what the next side is. And we talked about the potential square up here. Really couldn't get up there. Looks like we got a little bit lower. So it's possible that we consolidate and we run back up again a little bit later. But for now, not much. I really want to see it to hold above 91. It's just how it has to be. And long as we're below, like we spent a lot of time below 91 this week. So it tells me we're consolidating and, it's not quite ready for more long-term. And it's really not quite ready for a short. So I wouldn't be shorting this. Anything you want to add to that?
Interestingly, if you take the low from March, 144 days takes us out to October 6th.
Okay. That could be working too. That's another angle on it. Yep.
Coming up in a couple
Actually, I
weeks.
moved this up here just because of last week to see if we somehow tapped that and turned down, which we did.
Mm-hmm.
And we made a lower high. So it's a little tricky,
it might be doing a tiny ABCD down there.
Yeah, we gotta watch it. But yeah, you're right. We gotta watch the 144 working out because that could be the thing that's working.
Mm-hmm.
And also notice we drew this channel line. We've had that forever, but then we extended that last week, and you can see we're
held
really
it
holding
perfectly.
Yeah,
Yep.
we're holding under that. So everything is saying, give it a little break. It's done well. We've done well with the oil, so just let it breathe and sort of get ready for the next leg.
Mm-hmm.
Of course, looking at the weekly, the next leg looks like nothing but straight up.
Right.
So I'm guessing we could have, we've been, higher highs, higher lows all the way, even though the close was kind of neutral this week. So it's possible we relax into this next week and then continue. But, in the bigger picture, as far as the weekly goes, long as we're above this score of 45, let's say we're above 85 dollars a barrel. So I think that, above this box here, right? This is what we were looking at. So above that, above the 45, above 85, it's really in good shape. So any consolidations, pullbacks should be bought. And I wouldn't, this is not the zone where I'd be selling anything. Next, we go on to gold.
That triangle's getting tight.
I'll tell you what, man, I saw that tap the lower one, then I saw it tapping the upper one
I
this
know.
week, and I'm like, oh my God.
It is really, really contained and controlled right now.
It's really going to be a show when this thing, I don't know if you guys can see that. I'll darken it next time, but I think you can see it. It's just these dotted lines right there. And so we have a little bit more time to burn in here. We are wrapping, we're holding above 1940 here and just consolidating. So, what to do? You just let it be and let it finish up.
Yeah.
It's in the big picture, it is consolidating on a weaker footing because of the square of 90. We're right below that. But even, there's a saying, if the market's consolidating quietly below a square, it's not necessarily where you want to sell it. It's a little bit too quiet and it's above 1940. So it's really pointing to more of a sideways consolidation than a big sell-off.
Yeah, and the reason being is look at all the time people have had to get short, and the market rarely accommodates you if that's going to be the major move.
Yep. You got to be quick on your toes. All right, let's take a look at the weekly gold. Not much, pretty much the same story from last week.
The magic box is containing it.
Yeah, we're in the box and boxed in with the 2000 on the upside and 1919 at the lower. Not much to do. Let's just wait, like we talked about on the daily. Looking at the copper, speaking of metals going sideways.
That kind of did a fake out move this week, didn't it?
Yes, sure did. But we were onto it because of the square, 50% of the square.
Right.
We knew after we couldn't get above this 50% line, 380, 383, let's say. It was suspicious. We were looking for weaker condition. We were looking for consolidation with support at 354. And we took out the lower trend line. So it's a little weak. It's a little sideways. Not much to do because we don't have anything to go off of the lows. And the only thing we have to go off of is this thing rolling over off of the 50% of the square. And so far it's looking weaker than stronger and in consolidation mode. All right. That's
violently sideways.
Now the weekly showed us a little bit of a different picture, right? Because what it did was it took out the lower boundary of this lower fork. So it's consolidating, but over time it's losing that momentum and it's starting to roll over a little bit. Now we knew that after we went up and tapped this breakout point on this high, we were really up close to the 50% of the square on the weekly chart. So that's when we got the pullback. We had the counter trend and that failed. So we were looking at this entire thing to be a consolidation, and it still is. But if this low gets taken out, the low on the week of the 21st of August, then, we could have some problems here. It could get weaker, but still, it's in a good, stronger place above 90. So we don't have to struggle for it. We got so many markets moving, so we should just focus on those, like you're doing this week.
Right.
All right, the dollar chart. We've we called out this ABCD last week, and damn it if we didn't hit it right on the money. And so that's 72 down from the high. It's resistance. We had the box drawn in, so not much to do when the price is just jammed against your level. And
it's not ricocheting down, which is interesting too.
No, that's the thing. If that really actually something expired there, we would have just turned right back down. What happened instead was we butt right up into it on Wednesday and just really stayed there.
Yeah.
So now if we can get above, 105.5 or so and hold above the square, then I think, we have the continuation is what we have to look for. So 105.60 Well, let's say 105.65 is what we want to look for. If we can get above that, then I think the story will continue. Otherwise, we're going to look for some kind of a consolidation before we move on.
I mean, the strength is surprising though, because it's hardly pulling back.
That's right. Exactly. So it looks like it wants to just pop up, consolidate above here and move. So we'll see if that's what happens. But for now, it's right up against the level. So there's really not much for us to do other than to watch and let the next leg set up. And the reason we say that is we trade off these Gann squares. So we want to know, we really want to wait till it shows the proper placement. On the weekly, we have room all the way up to 106, let's say 106.15, 20, let's say 106.20. So there's a little bit more upside left. And this is a very steep run, and a little bit of a correction would be completely normal here. Right, Ben? I mean, look at this.
Sure.
Straight up.
Look, it looks like it wants to drive to that half square, doesn't it?
Boy, it sure does, man. That's what's pulling it. So let it get pulled up into that, and then we'll deal with it, when we get there. So not much for $1, just because it's exactly on our level on the daily. So not much.
I think it's 10 straight weeks it's up. Go back to that weekly. I think it's 10 straight weeks up on the dollar. I saw that someone said that somewhere.
Yeah, that's right.
What a move.
It's a good move.
Yeah.
I mean, you got all of that from the low.
Yeah.
That's even better, right?
That is even better.
Calling it on the run. Next, we have the euro. Pretty much the same deal. I mean, we have an ABCD right here set up, and it's coming into, and we came right into that. So it just looks like we're coming into some kind of a pause in these moves that we've been trending for a while now. So, we came down into this. So it's possible we consolidate a little bit all through here, or maybe a counter trend back, but looks like we're going to pause right above this 106 area.
I mean, a lot like the dollar, though, you're not seeing much of a lift off that.
No, actually, we kind of sunk under it.
Yeah, exactly. Yeah.
So it's looking very weak, whereas the dollar, we're basically just trying to even basically tapping it, right? We can't even get on top of it a bit. So a little bit of a difference. It's looking weaker, and it is weaker. So we'll I mean, the ABCDs are kind of the big deal this week. We had a number of items that had it. So it just means, it's the time to take a little pause and see if there's a change in the pattern. That's really all it comes down to.
See if we get a change in the pattern with a change in the seasons.
Exactly. And
that's
often,
the theme.
And often that's how it works.
Yeah. It's true.
And like I said, sometimes it's not exactly on the day, but there are patterns that come off of the exact or any of these points, actually.
Yeah.
So
that's right.
There are a lot of points around the circle that can trigger beginnings and ends, and they don't all have to be exactly on the exact date. So
yeah, on X this week, and I did say X, not Twitter, but on X this week, I pointed it out and said, listen, it's something to notice, because the change in the seasons affects every living organism on this planet. So it's reasonable to think it's going to have some impact on markets. Now, what impact? Is it dramatic? Is it not dramatic? That's going to depend on, where we are in the move technically in that market and what's the situation. But it's something to notice from a timing window. And we're in that window.
Absolutely. We're in the window, all right.
So.
And when we don't get them every day. So when we do come into one, we really want to look at the patterns going into that. That's really how these patterns work.
That's correct.
We'll see how that works out. So for now, it's a little bit of a pause. And even if we go off the high, we're coming into 72 degrees in here. So let's see how we get there. There's definitely lower to go. It's just a matter of,
how it gets there.
Yeah, how we get there. What kind of pattern are we going to pull on the way down?
How's the weekly look?
Yeah, let's take a look at the weekly. Still looking bearish. I'm not surprised.
Right. Got some timing there.
Got some timing. Main thing is, we finished this leg. This is the thing. We finished this big leg this balancing point,
Mm-hmm.
and I call them reverse ABCDs.
Yeah,
But
it's
when that
nice.
happens, man, it could really change everything. Huge things can happen. And I mean, look at here. We have 10
That's a
weeks
hell
of
of a
a
move.
yeah,
Yep.
we had 10 weeks of a move in the opposite direction. So that's a big deal. So that's worth waiting for.
Mhm.
And so frankly, that's what we're dealing with. So if you look at the 72.90, so that looks about, so even this counter trend, if you look it up, look at this.
Look at that, right into the
So
90.
I think we looked at it earlier, I mean, a few
Hmm.
weeks back, but basically, so we did a 90, almost squared out.
Yep.
I would say it's close enough.
Hmm.
I'm sure some purists wouldn't agree, but it's close enough.
Right.
But the fact that it went up to 90 and we had this kind of a hard pullback a hard pullback means we really haven't had a decent counter trend to get a second leg down.
Nope.
So it's time. I mean, it's possible that we get that in here somewhere, and not to confuse that with a whole nother trend leg up, mainly because we ran up into that 90 so cleanly.
Hmm.
That makes sense, right?
Absolutely.
Yeah. So
And after a 10-week move, it is just mean reversion. You can expect some kind of counter trend.
exactly. And we talked about this 5/8 level. So we're at 5/8 now. You can see how it held there earlier.
Hmm.
So with looking at everything, it's possible that we take a little pause, maybe bounce up next week. And I mean, it would be healthy for us to do some kind of a counter trend here. So let's see where it happens. And this lows today, looking at the dollar and the daily, looks like it's a reasonable place to expect that. So
And Barry, putting the macro picture together, if we get a relief bounce in bonds,
mhm,
get a relief move, weakness in the dollar,
mhm.
it's probably going to translate into strength in the equity market and get a relief
Well,
bounce there.
there we go. It lines up, doesn't it?
It all fits together.
Yeah. Yeah. So I think that's a really good point, and we are to watch all of that going into next week, and all the way to the 28th. Yeah.
Because remember, the bonds primarily and the dollar secondarily have been what has been driving this weakness in risk.
Hmm.
As you watch the bond market sells off, stock market sells off.
Right. Yeah.
So
Yeah. Let's watch that. That's a really important point. And
mhm.
it's not always that they're in sync, linked in that way. So it's interesting to watch it when they are, or
Yeah,
seemingly. So
yeah, we'll see.
I
We'll
think
watch it this week.
yep. Let's take a quick natural gas. Are you doing natural gas this week? No.
No, it's in that and cotton are still basing
Mm-hmm.
and bullishly basing, but
Mm-hmm.
I just there's nothing new to add, so I don't want to bore people with just looking at the sideways
Okay,
market.
because we do have regulars that come in just for natural gas, and what I'll do is just talk about this for like 30 minutes.
Still very bullish about it. Very
Yeah,
bullish.
totally it's bullish, and this move down, we held right around the 120, and we're starting to. I mean, you can see how it's
We're
making higher
creeping.
lows.
Yeah,
It's
we're
creeping.
creeping
It's making
higher.
higher lows, and the bottoming process looks healthy. It's not crazy,
Hmm.
and sure. I mean, let's just watch it. This is what happens if you go back and look at the history of how some of these lows come in. They would go quiet for long periods,
Look at that. Yeah.
right?
But then you can see the creep there too,
Yeah,
as it
you
starts
start getting the
moving
creep,
up,
and all of a
moving up.
sudden we start to move,
Yeah.
and we're in that kind of a cycle in the bigger picture. I mean, for the
Hmm.
next few years.
Yep.
So, these might look like really cheap prices at some point.
That's true. It's very
I'm
true.
telling you. So, I mean, all that is on the table because of this cycle, and gas is very cheap in here. Let's keep an eye. For now, nothing radical, like Ben was saying. It's just painfully sideways.
Yep.
So
But if you decipher the price action, it's bullish, right? Because we are quietly making higher lows and creeping up.
yeah, and this entire thing is sort of a bottoming process, right? It's bottoming
Hmm.
price action.
Hmm.
and that's nothing to sneeze at.
No, it's not.
So overall, yes, it's okay. It's hanging in there. It's moving, and we have to allow it to properly put in a good low.
Mhm.
So for now, not much, but it's starting to show. It's starting to show. We just needed to clear some of these and get on top. Price
That's right.
action down here, right
That's
around,
right.
let's say,
282 is my level. It's got to get above.
well, that's really good. Yeah. So
Mhm.
yeah, 282, 289, right in here. I mean, that would clear
Mhm.
the ledge. Of course,
Yep.
by that time, everybody's going to see it, and then the momentum will start to pick up. Just kind of how it works. So yeah, I mean, I'd be happy to see this week's high gets taken out,
Yeah.
which is right in there, exactly your price.
Hmm.
All right, and let's see what's happening in the Hang Seng is straight down.
Right.
Well, what's interesting is, man, it's working really well with the square. So
Yeah.
72, you can see 1854, 18,054 was really the 72 down.
Yeah.
And, we did this little pattern in here. And this is what we talk about when we talk about levels. It doesn't matter what the market is, always a lesson. And you can see how we started really gathering below the square, right? We had about
Mhm.
5 days there, did a false break, came back down, and here's the fast move.
Yep.
Right? Move straight down, took out
It's
these
textbook. And look at that counter trend into the half square. Another perfect textbook move.
up here.
Yeah.
Ah, beautiful. Yeah. That's perfect.
Perfect
there.
example, right?
Yep, exactly. So this is looking good, and looks like really, we have a Gartley down here, and so it looks like we have a little bit more to go. 17,000. 17,000 looks like that should be the next reasonable area, because we really couldn't get above 18,054. Well, that's all I got, Ben. Let me put it back to you. Let's cover
Okay.
your stuff, and
We'll spend a little time on the NQs, and then we'll look at the anatomy of a short in cocoa.
all right, sounds good. Well, Ben, didn't we have? Well, we got ABCDs everywhere.
They're all setting up.
And right to the your square line.
Yep.
Very nice.
So here's the NQ. We've been watching this one, and sort of this was again this is the perfect setup, right? You have a high, first pullback, and then the lower counter trend, right? That's what you want to see. And when you get it into the full square here, it gives you something to sell against, right? You're not just in the middle of the air. So off this reversal, right? You had this big outside reversal bar here, and that told you, okay, game on. And that was essentially Monday, right? Because it would have been a Friday, Thursday, Wednesday, Tuesday. Yeah, like Friday, Monday. So here, the key level right now is, do we get stuck below this half square? And the half square is, just under 15,000, 14,955. If next week we get stuck under that, it opens up, going down to visit, completing this ABCD and visiting the full square here. Now, if we chop around here and then can somehow get on top of it and sit on it, then maybe we can push back up, and see if we can challenge this full square here and take out those highs. The first things first is it's got to win the battle here.
Yeah.
At this half square, we closed. We're closed. We closed under it, so right now the pressure still remains to the downside. But I want to show you the weekly and monthly here. Anything to add on the daily?
I would say sell the rallies.
Yeah, for now.
Yeah.
Until we clear this.
Yeah.
And sell rally time. Let's look at the weekly. Perfect, right? Came off the high, pulled back right into the half square, and now we're selling off hard.
Yeah.
ABCD comes down, again to the full square around, what is it, like around 14,300, 14,330.
Oh, that's good, because I have support at 14,260.
Yeah, right in there. It's right in there. Well, 14,275 is the exact ABCDs are right on your support.
It's right there.
And so it's in this little area in here. And remember, when you're working with these squares, an eighth either way is okay, right? It's kind of the leeway you give it. So
We don't talk about it much, but yeah, that's kind of the rule.
it is. You got to give it a little bit of a leeway. So here, again, until we clear this half square, which is 15,600, call it, the weight is to the downside. And so we got to see what it's going to do either at, at this low here. Does it take out that low and head on down to complete the ABCD, or do we chop around in here? Until we get above that half square, the target is right here, the full square. And I wanted you to take a look at the monthly just to share a laugh with you. Look at where they closed it.
Of course.
Right, right on the monthly half square.
Yeah.
So we have an inside month going right now, so that doesn't give us much of a clue yet. But this half square is pretty darn important. So if we push down, next week is the last week of the month. If we push down, we conceivably could take out that low and put in a lower low for the month, which would be another down bar. So all in all, the weight of the evidence is to the downside on NQs right now, unless we can firm up and recapture these half square or full square levels. Anything else to add on NQ before we jump in with the commodity review and looking at the short cocoa?
Well, since we're kind of looking at it a little closer, I think, yes, below, what's the number I have here? Like 15,200, let's say. Right. For me, long as we're below 15,200 or so, it's definitely on the short side. But I feel like we really haven't crossed, but like the momentum hasn't really shifted hard to the downside yet.
Not yet.
I think that would happen if we take out this, the low on the 18th, August 18th low. If we take that out at some point, it doesn't matter if it's next week or a week after, but if we take that out, I think that'll shift momentum to the downside and things could really kick into place. Up until then, yes, it's on the short side, but I would really like to see the next counter trend to sort of measure the quality of the weakness.
Yeah, because it could also, Barrie, it could also just sort of chop around here and form a triangle.
It could certainly do that. Yep.
We could head back up, and then we could, once we get this reversal, we can put this trend line in, and then we'd have a triangle forming.
I told you there's a lot of tech stocks that I saw was doing these big distribution patterns, and so it's likely that could continue. Distribution after huge bull markets don't really end in a couple of months. They could go on for months and months, so it's possible.
Yeah. It's going to be interesting how it plays out.
Anyway, watch these levels and we should be okay.
Exactly. On the commodity side, the grains are not ready yet. They're all sort of finishing up, and they're pushing lower. So they're trying to take out, some lows. And I think it looks like they're finishing up moves to me. We'll see how they progress and see where they decide to find support, and then the next move higher will tell us a lot about what's going on there. On the softs, cotton, just like natural gas, which Barrie talked about, cotton continues sideways with a bullish tilt, meaning we're seeing higher lows. We're now sort of making lows on top of that consolidation, really waiting for the blast off for momentum to kick in there. Sugar's putting in a high. Coffee made a nice move early in the week and then pulled back sharply. So we got to see where this pullback happens. Gold, silver, copper, all three of those are in triangles, like daily triangles, weekly triangles, monthly triangles. They are just winding up, as Barrie showed you when he reviewed gold. They're just winding up right now, and they're getting into the apex. So those things are going to break in the next month or so. And crude, you covered, where we're, pressing up on the highs and, having some trouble at resistance, but we just want to see the next pullback on crude and see if we get it in a decent spot where we can get back long on that thing. But the one that I talked about a few weeks ago, and then we sort of left it after it didn't set up for the potential short that has now set up is cocoa.
Mhm.
Let's walk through this. I'm going to show you weeklies and 4 hours here, and we'll kind of do the anatomy of how it sets up. The
Mhm.
interesting thing about cocoa is on a daily basis from this March low to this high, we did 120 by 120 square.
Mhm.
Now you say, okay, what's so great about that square? What's great about that square is not the square itself, but what happened after the square came in. Look at the price action the days after that.
Mhm.
Boom, 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 boom. And it's pulled back to where it should, right? Where good support would be, which is on this daily full square. But when we zoom out a little bit and go to the weekly, what do we see? Pretty
Yeah.
vertical move, right? Really super strong move for essentially that ran for a year, right? From this low, which was last October.
Right.
Beautiful move up into an ending half square. And this week, what do we have there, Barrie? What's that? One of our most favorite things to see on a weekly to denote a potential change or a corner.
Mm-hmm.
It's an outside reversal bar.
Yep.
So this week was critical from the standpoint of I got a square, I got it into a resistance level, and we got outside reversal price action. So why do we think now might be a decent time to put on a short here? Well, let's drop down to the 4 hour and look at the price action a little more granularly. I put this Gartley in, really nice Gartley, right?
Mm-hmm.
The equilibrium line caught the high, which you like to see. This line here equilibrium line acted as really good resistance. But what did we get today? So first of all, we had down, this is the down move off of the high that equates to the outside reversal bar on the weekly. And then we had a few up bars, right? And then we get an outside reversal on a 4 hour basis. That's the trigger, right? That tells me that, okay, this counter trend, there's a good chance that this counter trend is over and the primary trend, which is now down, is in place. We got a lower high. We have our low. The reversal's in place. We should come back down. The next battle, I think, is going to be at this XB line. And maybe we only do an ABCD down into this target box.
Mm-hmm.
But look at the levels we're talking about, 3,200.
Yeah, move.
Right. And you can, this is a counter trend move, right? Because the monthly is good. The weekly is good in terms of bullish setups, but you try and find these kind of setups where really strong risk reward and the ability to have a big move in a short period of time. I know I breezed through all these things, so you probably have comments. Anything you want to comment here on the 4 hour level and sort of the entry we were looking at?
Well, the entry looks fine. I mean, it's a low risk entry, and that's what we have to do. Mm-hmm. And we talked about last couple of times, or maybe a couple of weeks ago, how if you can really tighten up your risk on some of these big epic size moves. I mean, if you look at the weekly, you can see how, we ran basically on a very steep angle going into for a year, 52 weeks, basically. And we squared out. Actually, if you take that low in October and square that out on square 52, we squared out at that high. It's really 52 in time and one square and 7/8 of the next one, 1 and 7/8 on the price scale. So that's the square on a weekly.
I was just looking at my notes. I actually have on the weekly, it's 90 by 45.
We have a 90 by 45 also, but this one is very close in time. It's exactly 52. So it's 52 actually hits this week, which is 1 bar off, and that's okay. So yeah, that's we're okay. I think it's a worthwhile shot here because the risk is so tight. That's the main
Right.
thing. And one other thing, I think the trade I'm looking for is really, can you go back to your 4 hour really quick?
The 4 hour, sure.
So if we can take out that low
Right here.
right there, and the risk is on top of the high bar after that low right there.
Mhm.
And that is really tight risk for cocoa. And if we can get positioned there, I think it's a worthwhile shot. And it's really coming in at the earliest possible point window.
Absolutely.
It's good. It's good.
And this is a decent setup. And it kind of summarizes, you know, the method that Barrie and I use, which is we try and find a corner in a market and then wait for the setup that gives us the best possible risk reward to get involved to catch the fast moves that come around those types of corners. And Barrie, I think given that, you know, this is the sort of out of the normal trade, you and I don't very often recommend, well, I don't think we've ever recommended any shorts on commodities since we've been doing these because we know we're in a bigger picture bull market.
Well, we called out the short side, but we never called out the trades.
Exactly. Tell me what you do, because I think there's a lot of people that struggle with this, and I think cocoa is a great example. Let's say you've been on cocoa like we were early
for a year
in the bull side and said, okay, it's time to trade the bullish setups. And then there's a shift. How mentally and sort of operationally, how do you get yourself to start saying, okay, this is what I have to look at. This is what I need to do. How do you make that and flip that switch mentally and tactically to, if especially in a market where you've been trading one side for a long time? Because well, I think when you and I were talking before the show, you know, the market's been pulling back in like ES and the risk markets, and everybody's looking, you know, that you see the chatter all over the place. Everybody looks at, well, you know, where should I buy it? Where's the support? Where do I buy? When the tide has sort of shifted. How do you handle that? And how would you recommend people can, you know, mentally make that flip when the market and the data that we get tells us, hey, it's, you know, this direction is done. It's time to look in the other direction.
Right. First thing is you have to have one thing, and that is just a little bit of mental discipline. And, you know, this is why we always recommend Mark Douglas, because he, you know, disciplined trader would like used to be my Bible and it was your Bible, you know,
right.
Really, it's really important to understand your relationship to risk and how things shift. To answer your question, I keep it really simple. It's a really complex, and, you know, you can practically books have been written exactly on that question.
Right. Right.
But the really simple answer that works and is practical is you look at the price action and you want to see if it's making higher highs or lower lows. That's really all it is, because that'll tell you what the trend is. Now, on top of that, if you can overlay whatever the patterns that are happening within that, those two things, pattern, you know, the overall pattern, and then you look at the little bit zoomed in, the micro, which would be the higher highs and lower highs and higher lows, those kind of moves. The price action. So if you look at the structure that way and you combine it with known patterns, like let's say ABCDs or triangles or whatnot, flags, then it helps your mind switch without you having to make an effort, because the mind knows. That's why it's really important to study patterns and charts a lot of history, because it's studying to train your mind to know what to expect. So after a while, I mean, just think, if you only study triangles, when any triangle breaks, your mind knows, oh, something's going to happen. Something different is going to happen. So you're not going to pretend you're still trading, chopping through a triangle. You know that it's either going to run to the upside or it's going to do a false break. You know what I mean? The mind kind of understands the options, the potentials. So it's the same way when you're trading, let's say cocoa, you know, from October low, we ran up, maybe you can put your mouse on it, right there. We came down, we flushed it out. That was easy to see that. Did a false
There's your
break
false
over in
break.
July,
Yep.
right?
Yep.
If you're watching that, you see that. Then you say, well, how do I know that's a low? How do I know that's going to nail the low down? Well, a couple of ways. You look to see how that low came in from the prior price action prior to that. That's one. Second is from that point, you look to see what the next counter trend is going to do. So the next counter trend came down into late October. And what happened? It held above. It basically held above the high of the low bar.
And it held the half square.
It held the half square. Like, let's say somebody didn't have that, right?
Right.
Even if they didn't, you can see high of the low bar was where those other lows came in right there, right? Which is just happened to be your square happens to be that.
Yep.
So
Right.
well, it definitely makes it easy if you're running some squares. But so there's your first point. Now, once we start lifting from there, we know the next potential is for an ABCD move leg up. That's the first thing. Or like we also say, like from the Elliott side, we're ready for a third leg, third wave, right?
Yep.
And we kind of got that. We got a good, nice, fast move up. So once the high, the October high gets taken out right there, we have to assume a new trend is started.
Man, look at that perfect structure too.
Well, this is why cocoa is good. Cocoa and all this. So that tells you. So that leg ran up into November high, pulled back. I mean, this is textbook. So it came right back up to the October highs, just like you pointed out.
Yep.
Well, which way is it moving? Well, it's not moving down. It's making higher lows. So it's moving higher. So you trade the long side and you limit your risk by looking at the price action and see where your levels are. So from that point on, if you just use the same logic, it would have kept you long all the way through. Or it would help you buy the dips and exit the impulses, however you would trade it,
Sure.
So after that, just to walk it forward, go ahead.
I was going to say that it's so important what you said about watching the price action, because what is sentiment like around here? What is sentiment like around here? Everybody hates it.
Yeah.
What is sentiment like around here or around here? Everybody loves it. So if you're listening to the noise, or if you're reading about the noise and not watching the price action, it's going to put you in the wrong spot, because you're going to want to sell it here. Say, oh, this is it. I'm going to sell it because we're going to make lower lows. Everybody hates this. Or I'm going to buy it here because this is pullback is a buying opportunity.
I mean, look how clean this ran. I mean, so you look at you take the November, December price action. See that? Right there. So if you take the low in November and the low in December, you draw a little trend line there.
Right here. Yeah.
If you draw that, let's draw some trend lines. Yeah, not even that, just from the, yeah, that's right. Okay, that's right. So then you draw another one connecting the November high and early December high, that little triangle. Yeah, something like that. And you can take the December high and the other two highs and make a really tight triangle too. You see that? Right
here.
Yeah, right there. Really tight triangle coming down. Yeah,
here,
there you go.
Yeah.
If you look at that, okay, there's your triangle, and you broke to the upside, came back for a back test, January, first trading day.
Yeah.
Right? And
there, yeah. And then here.
Again, ran up again, right?
Yep.
Then we corrected a little bit, came back down. Where did it come back down to? That January low was exactly where the breakout happened from the triangle, which is like a textbook. That's an automatic buy. Because the odds are it's going to hold, and if you take 10 of them, majority of them will work out. So from that point, it just slowly started making higher lows. Look at all the lows after that January low. Late January low was a higher low. February low was a higher low. March low was a higher low. And the March low came in on the bigger triangle. The February triangle broke out.
Right up here.
Right there, right? If you draw that line, look, it's a very cool line. Draw that. There you go. Right there. That came down. And then what did he do? We're now, so now look, how far are we from that November pullback, late October pullback from 2022? We're months away now, and the
Yep.
market's so much higher. So that's the thing. Now we're in a trend, and we know it's moving higher. So you're just looking to trade the long side up until it switches the other way. So now let's figure we got the middle. Let's go to the end.
Mm-hmm.
So here we just got the high, and we can look at that kind of like the September low. Okay, so we squared out, everything happened. So there's the high, and here's the first pullback. Now, on a 4-hour basis, you already had the setup, so you can take that. But on the basis of this chart, well, we're looking to see, we'll probably have some kind of a counter trend, and then you look for the failure. And after this low this week, Wednesday, Thursday, Friday lows, which are pretty much right on top of your square.
Yep.
Once they get taken out,
yeah, you take that out in the square, then it's off to the races downside.
And then you come back into your default mode, which is you switch to the short side and you take all the short side setups. So the mental shift for me happens after that first pullback holds. Somewhere between the first pullback and, like, if you say AB, like go back to the September low.
Here?
No, our September back in 22.
22.
Yeah. So let's say that's an A, the high is a B, C was the late October low, right? If that's the case, from late October, as we're moving up, okay, my mentality is changing already to, okay, we could have a low in place. And as the high gets taken out, the B high gets taken out. Now I'm switching. So after that, the pullback in November finishes up, we're on the other side. We're trending. So from there on, I'm not looking to sell it.
And that's the key thing you said, Barry. Once this high gets taken out, so right here, let's say on November 3rd, you're done. You're switching. You're out of bear mode and into bull mode, saying, okay.
Well, depends on, I mean, that's really the mechanical way. Like if you didn't know anything, that's a really, anybody
because
can know
we
that.
have squares here, everything, we had a false break. We have squares. We got everything. This is the point where you got to switch mentality.
That's right. And long as we're from there on, we're making higher lows and higher highs, you stay with it. You stay with it up until something squares out on the other opposite side, which it is doing now. I mean, the annual cycle is a big one. We ran 52 weeks. All right. I think it's worthwhile taking a look at that, because that's not something you try to sell every week. It's once a year.
No, it happens once a year.
Right.
That's
and
right.
The move is very clean and it looks good. It's got legs. So now in my case, this looks like it was a false break. We had that triangle, then we did kind of a false break to the upside. So we're waiting for it to flip. We need the same flip to the downside that we talked about, on this side. Now here it's a little tricky. It's funny how commodities make this tricky. Do you see the triangle there in later? Yeah, right there. Yeah.
Yep.
If you draw that out, you can see we broke to the upside. So that was a false break to the upside. Yeah, right there. So if you were watching that, if you bought that, that would be if you're just real bull market, that would move up, come back down, kiss the breakout
the apex
point,
here, and then go
and move higher. But we didn't. We broke down. So that means, okay, it's false. If it's false, there's a higher probability now, even another sort of coin to collect. The fact that, okay, we could have a high in place. So you start checking the boxes. So from here, soon as we have some kind of a counter trend, like maybe another little bit screwing around, but we need a clear pivot. And after that, let's say we go up one day next week and then we turn down. Soon as that low gets taken out, then we flip to the other side. But here it's not the same as the September low because we have a different pattern, right? That was a false break. Here we're dealing with a false move, false break on a triangle. So it's another false move.
Yeah.
And it's worth tracking. And
this, the 4 hour is the aggressive entry.
Exactly. So when that low gets taken out right there, that low right there, we have that, we get that 4 hour pivot shifting.
Mhm.
So that's why we said if you want the early bird sort of entry with the minimal risk.
Yeah. So if one is super aggressive, that's where the 4 hour entry is, because you consider this sort of this move here your first pullback.
Right.
Either way, I thought it was an important thing to cover, not only from the trade opportunity, but from a, just from a tactical and strategic standpoint, how we deal with, again, looking at this, how you deal with the psychology of being bullish down here, or in this case, bearish up here. And I think it's really important what you said. It's about, training your mind to look for those patterns. And when those patterns appear, understanding what's most likely to happen. So you have an idea of what to expect and what is most probable at that standpoint.
And that helps act as a switch to switch the mind from, let's say, long side to short side or vice versa,
Right.
Mhm.
Because I don't know. I thought it was an important topic for us to discuss, because I know it's always a challenge for new traders and old traders and experienced traders, inexperienced traders, is to flip that switch when circumstances and evidence dictates that, hey, you need to start looking the other way.
Well, what most people do are, they handle this with moving averages. If it crosses to the upside, I'm long. If it crosses to the downside, you're short. But the problem there is when it gets into consolidation, they get all chopped up. And without having the pattern component of it, time component of it, it's very difficult just to do moving averages or any kind of a line or indicator.
Right. Well, listen, great job. Thanks for covering that, Barrie.
Yeah.
This week, where's your focus? I'm going to be obviously watching Cocoa like a hawk, since it's triggered for me. I'm going to be watching those sideways patterns and the triangles in the other commodities, and of course, we got to see, how this correction and or consolidation in ES plays out, based on price action next week as well. How about you? Where's your focus going to
Well,
be?
S&P is definitely one to watch, because if we continue or not would make a big difference. Another 100 points is another 100 points.
Sure.
So definitely have to watch that. And to crude to see if we back off or if we break to the upside. Dollar, same thing. Everything ended up on lines this week, this Friday. So
yeah,
so we have to kind of watch everything just to see, is there going to be a continuation, which means we'd have a lot more to go in that same direction, or if we're going to back up and do some kind of a counter trend. So I'll be watching everything generally, but S&P for sure would be the main thing.
And given the autumnal equinox coming in tomorrow, it's something else we got to throw in the mix. Why, you have to watch. I always say with cycles, was people say, oh, are we going to get a high? Are we going to get a low? Or is it going to reverse? You got to watch the price action coming into the cycle and then the price action coming out. And that's, next week will give us more clues as to what is the effect on different markets, because it can be different in different markets too. Some markets may, just continue to chop around or consolidate. Others may turn on a dime, and others, as you said, could just be continuation. So we got to watch them closely. So this week is eyes peeled, well rested, watching a lot of markets to see, what kind of effect the cycle has. Listen, everybody, have a great week. Hope you enjoyed the show. Barrie, terrific job. Have a great week, and we'll talk soon.
Thanks, Ben. Good job. We'll see you next week.
Thanks, everybody.
Bye-bye.
Bye.